All right, we are live. We have an educational VC today. It's going to be our 7th education session. Today we're going to talk about the gold mine and kind of a high-level overview of the strategies of how to use the gold mine, which is Forge BNB liquidity pair, how to use that as a tool in your crypto toolbox. We're going to talk a little bit about the micro strategies. We'll talk about the solvable problem and the 3 C's, how that ties into the gold mine and the strategies that we're deploying. We'll talk about market cycles, talk about time and randomness, talk about all kinds of cool stuff. Okay, so let's kick off. Just to give a quick little recap, we have been live for just over a month. It's now been a month and 4 days. We launched on March 17th, and it is now April 21st. So we're just a little over a month, and things look really, really good for us. We're listed on CoinGecko and CoinMarketCap. We're sitting right above, what is this? Right above a 6x from launch, which is phenomenal. And we've just been moving sideways. We formed some pretty strong support right here. That could go down. To be completely honest, don't really care. It could retrace all the way to a 2x, and I would still be happy at this point. So, for those that are holding just tokens, that may be different. And we're going to talk a lot about that right now. So let's just kick into it. Okay, so I just wanted to kind of give a high-level overview of what the gold mine is, how the assets intended to be used, and if you believe in this project and you believe in the ecosystem, why it may make sense. Of course, if it depends on your solvable problem and your macro beliefs and everything, it may make sense to focus on using Forge the way it was intended to be used. Okay, because you can use it in other ways. And there's nothing wrong with that. I'm just going to provide some perspective today. Nothing that I'm saying is to be construed as financial advice or to do, what I'm providing, the information I'm providing. This is just what we're doing. This is the proven path of how we all win together. So if you believe in this project and you want to do the things to help move it forward, understand that everybody plays an integral role, and we leverage the individual effort from the collective in order to make big waves. Okay, we always talk about row together in the same time, in the same direction. This is a big lever for that. Okay, so what is a gold mine? On our white paper, there is a whole section talking about the gold mine. It has this strategy graphic in there. But I wanted to kind of revisit it so people understood, and maybe new people coming in who don't have the bandwidth or the patience to watch 6 or 7 videos, they can understand what the gold mine is and how to use it. Okay, so the gold mine is the liquidity pair of Forge BNB. Okay, now it is just a liquidity pair, but we are fortunate to have a farm, right? On NightSwap, if you didn't know, we do have a farm. It's right here. It's a 1x farm. That could change. There is room, and this is speculation, but there is room to get a higher emission rates. And we do have some control over this APR and APY, which very likely we will be raising a bit for you guys soon. Okay. So the gold mine refers to this liquidity pair. Okay. So in order to pair liquidity, you need to go to the liquidity tab if you're holding Forge tokens, and you'll need to add equal parts of Forge and BNB. Okay, so if I say, I have this much Forge and I want to pair it all, it's going to tell you how much BNB you need to pair it. Okay, and this is just a dummy wallet for anybody who's wondering. It's going to tell you how much BNB you need to pair it. You need equal parts of Forge and BNB. Okay, so what we know is when the price of Forge is lower in comparison to where it was a few days ago, it costs less BNB to pair more Forge tokens. Okay, the longer you wait, if you're holding tokens and you're chasing upside, it is going to cost you much more to pair those tokens later on. Okay, And we're very likely to see a lot of sideways movement for the first 3 to 6 months. If we zoom out and we're looking at, an acceptable trajectory. I mean, in my opinion, an acceptable trajectory would be completely sideways. I'm okay with that because I know how this stuff works and I have broadened my time frames. Okay, but ideally, we would like to see some sideways and upwards movement. Okay, because if we are teaching people how to create a solvable problem and helping them understand that making less moves is generally better, and having conviction and reallocating resources and all this stuff that we're going to talk about. What we do is we effectively alleviate selling pressure because these people understand I have a set plan. I have a problem that I can solve, and if they deem Forge or the gold mine as a tool to solve that problem, just like the base case is used in the wolf den, right? So if they use the gold mine as a tool to solve that problem, they create conviction in that. They know it doesn't make any sense to sell an asset that earns me more assets. Okay, and the asset doesn't earn you more assets on its own. The gold mine is what earns you assets, which is why it's called a gold mine. Okay, you're mining more gold. That yield is earning you more yield, and that yield is earning you more yield, and more of what you want. And we're going to go into that a little bit later. Okay, but the gold mine is this liquidity pair. Okay, and in the farm, you drop that pair into the farm here on NightSwap, and you're getting an average of almost 80% APY at this point in time. Okay, these numbers fluctuate all the time based off of the price of both of these assets, based off of the TVL and the pool. There's a lot of factors that go into this. I'm not going to go into detail. There's already resources explaining this in depth. Okay, but we know just based off of yield in Night tokens, we are making about 80% APY. That outpaces any other yield from investments in the traditional financial world by a landslide. Okay, so to give some perspective, if we moved completely sideways and BNB, and this would never happen because it's a complex system, but BNB and Forge stayed exactly the same price, and you got 70% or 80% on your capital, and then you earned yield on top of that yield, because this is 80% in Night tokens, right? And then you take those Night tokens, you go stick them in a pool, in the Night pool, you earn an additional 147% APY, or you go stick it in a raid. Let's say you go raid and earn some guard, and guard appreciates. Now you've earned appreciation on an asset on top of another asset that you've yielded. So the compounding becomes exponential when you're compounding assets versus, when you're compounding appreciating assets versus something that's depreciating, like a car or whatever. Okay, so it's a game of exponentials, and we'll talk a little bit more about that. Okay, so what the gold mine really is, and this is what we were talking about, is it is a passive asset accumulation tool. Okay, and all the stuff that I'm talking about has been kind of derived from watching and learning what people who are much smarter and much wealthier than me do. Okay, they focus on, if you look at these big institutional money or hedge funds, they focus on assets that yield other assets. Okay, that's why Guardian's developing a lending network, because the lending network will technically take it into the asset class of a treasury asset. Okay, that's when you start to see big institutional money starting to make moves once there's regulations in crypto, which will be great for us and for the Wolf Den and for people who are ready for it, and very bad for people who are trying to scam people or running, meme coin projects and have no clue how to run a business or do any of this high level stuff. Okay, so Goldmine earns you more assets, right? So if I take that Night that I earned from the farm, right, and I move it into the pool, it earns me more Night. I take that Night and I stick it in a raid. Let's say it earns me guard or this one's new. It's a good APR. You're looking for quality APRs, and it's low taxes and it's small amount of TVL, right? but let's just say you're earning Libero or something. Okay. You're creating a passive asset accumulation compounding cycle. That means that you can yield more assets on top of your assets through a closed loop system where you technically don't have to put any new money into it. Because at the end of the day, whatever you're doing, ideally you are getting more BUSD. Okay, whether it's from selling a raid asset or just yielding BUSD or going straight into the night raids and selling an asset to get BUSD. At the end of the day, you're getting BUSD or BNB, whatever, and that's what you used to build your gold mine or to buy Forge in the first place. Okay, so if you split that BNB into half Forge, half BNB, you are manually compounding your gold mine so that your gold mine gets bigger, it spits out more night, that night earns more night, that night earns more of an asset, which earns you more BNB, which earns you more assets for your gold mine, right? So you have a closed loop compounding cycle. It always, if you look at compounding interest, like a great example is a penny doubling every day for 30 days, right? The beginning is very small increments, okay? When I was yielding 2,000 guard tokens a day, when it first launched, it was $20 a day. It is now $15,000 a day that I was yielding. Okay, and that's retroactivated because I never sold that guard, right? So technically, even back then, when I thought that I was making $20, I was actually making 15 grand a day. So it proved to be an extremely valuable strategy to accumulate assets that can appreciate and use those in the appropriate way the asset is intended to be used. So you don't sell it, right? When you're sitting in the gold mine, you're playing this, you're broadening your time frames. You have a problem that you're aiming to solve, which we'll talk about in a little bit, and you're hedging your downside. Okay, so when Forge goes down, two things happen, right? Two things happen for two different people. People who are just holding tokens, super excited, right? Oh my God, it's dipping. Getting excited again. Oh my God, it's dipping. Now it's moving sideways. Excited. Now it's dipping, right? They've gone through this emotional roller coaster, and their actual monetary value is likely very close to being the same as it was right here because they're not earning any yield, but they're at a huge emotional deficit. Okay, because watching the chart becomes a habit when you're not sitting in the gold mine or the base case in the wolf den, right? Because your only way of making money is appreciation of Forge or BNB or both, right? So the other person who's sitting in the gold mine, this doesn't affect them at all because their yield in night remains the same. It's a constant, right? And they're getting yielded a different asset that has a different value. Okay, so their yield, their return is not dependent on the price. And the price becomes irrelevant because they don't really care about the price. If it was, like we talked about, if it was to move sideways for a year, they would still get 80% APY and outpace anything in traditional finance, which is amazing, right? If you get 80% every year, we'll just look at it real quick before we hop on 5,000, 80%, 5 years, daily compound. Put in $100 a month. Okay, so if you have $5,000 and you get 80%, let's just say it's just the yield. Okay, you get 80%. Night stays the same price. It doesn't go up. Okay, this gets exponential. Night starts to go up. You get 80% for 5 years. You compound once daily, and you put $100 in a month. Okay, in 5 years, that $5,000 becomes $350,000. Okay, that is a huge return for doing nothing. The reason I say doing nothing is because we are getting an auto compounder built. and it will likely be built within the next 1 to 3 weeks. It's a conservative time frame. Okay, so once the auto compounder is built, this cycle goes on autopilot. There's a smart contract called a vault, which is another name for an auto compounder. And what it does is it's built on top of the farm. So it takes this night that you're earning daily, and it sells it into half forage and B&B right here, and pairs it back into liquidity. And it does that twice a day for you. So now you're compounding not just once a day, but twice a day, and you pay no gas fees. Okay. So in the Wolf Den, base case and chill, the chill part is sitting in an auto compounder, having a solvable problem, understanding or choosing, having conviction in that at the base case is the tool to get you where you want to be. Right? And there's very little emotions tied to it. You don't have to click buttons. The people who sit in that will probably outpace anybody else over time. But people are chasing upside. They see the APR and the APY going down. They don't understand the correlation of how all that works. You know, they see what happened with Guard and they start thinking about impermanent loss. Just keep in mind, Guard is 9 or 10 months old. Okay, we are a month and 4 days. We got a long ways to go. And nobody's in a rush. We are not rushing. Understand that. So if your strategy is to hold the tokens and we move sideways for 3 months, you're likely going to miss out on a lot of potential gain, especially if Night takes off. Okay, if Night takes off, the auto compounder, which is using Night to buy forage, if Night goes up, now the auto compounder is buying larger amounts of forage every day because your yield is going up. Right? So the yield earned Night, it's another accumulation asset, right? We know that because we've been doing some education around Night. So it doesn't really make sense as long as, and I can't say this for everybody, and we'll talk about it with the solvable problem 3.6. It doesn't really make sense to sell forage or to sell Night or Guardian if you get that from the rewards NFTs, or you create a hedge or secondary base case, right? So the yield is earning on top of your yield. So this is just talking about return in Night tokens over the year, right? If Night doubles, so does your APY, because your yield is doubling, right? And if we know what happens with DEXs, there is 430 million in TVL right now. When we launched, there was less than 200. So it has over doubled in a month. What we know about DEXs is usually when the TVL starts to take a huge jump and the volume increases a lot, that's likely when you'll start to see a mania phase, right? So when Night starts going up, all of the farms, APR, APY, and all of the farms, because they're all earning Night, all of these will go up, which brings a lot of new money in. Okay, if the price of Night is going up and the APR and APY on the Night farm is going up, this gets really attractive, and a lot of people start buying Night to set up base cases and stuff because they're chasing APYs. That's exactly what we want. Is we want people being silly and chasing APRs and APYs. Okay, that benefits all of us. But that was just some perspective around how all of this works, right? And the farm creates an effective hedge for your downside, like we talked about. So people who provided liquidity up here or up here, even though the price is down, they've accumulated Night tokens that has value, which could be making up the gap. Not only that, but within their liquidity pair, because the price of forage has gone down, they actually have more forage tokens and less BNB. Okay, so if they broke it, they would be taking away more tokens. So either way, they're in a better position. They just have more optionality and a position of strength. People holding tokens are playing the hoping and praying game. This thing's going to go up. Okay, if you're treating forage like every other asset, if you're trading it or you're just holding it, you're missing the point. And that's okay. We're not here to pathologize anybody for having a different strategy, as long as you know why you're here. Okay, and that brings me kind of to the next point. Okay, so we've talked about this before. I'm not going to go into it a lot, but the 3 ways that your gold mine earns you assets is you get yield from liquidity mining fees. Okay, so all of the transactions, all the volume that goes through that liquidity pair, anybody who trades Forge for BNB or BNB for Forge, you get a small percentage of all of those trading fees. Over time, that adds up a lot. Okay, Guardian's doing over 1 to 2 million in volume a day right now. It adds up. Okay? So before farming, this is why people would provide liquidity, and it's much more lucrative in let's say, an Ethereum token, because the transaction fees are much higher. But that's why we don't like Ethereum as much, because it's slow and it's really expensive as far as gas fees, right? And there's not really much farming opportunities because of that. Okay, you earn assets from the yield from your liquidity pool farm on NightSwap, which is what we just talked about, and you get appreciation of the assets that are in the pair. So if Forge goes up, or if BNB goes up, or if both go up, in all 3 of those scenarios, your capital goes up. But when your capital goes up, the APR and the APY comes down. That's how they relate, right? And that's okay, because you're earning a lesser percentage on a larger amount of core capital, which means you're actually making more money. And the vice versa, if the price went down a lot, the APR would skyrocket, and you'd be like, "Oh, sweet, I'm making like 500%." But you making 500% on your pair that's down 50%, you're making significantly less money. You're just tricking yourself, because of the way we're programmed to think about numbers, into thinking that you're making a bunch of money, right? That's why chasing APY and all that stuff is silly. And we'll talk a little bit more about that. Okay. So we've talked about this. If you guys, before I move on, does anybody have any questions about what we just talked about?
No, buddy. Keep rolling. Good shit.
Okay, so let's talk about how the gold mine comes into play with the solvable problem and the 3 C's. Okay, so the solvable problem, for those of you that don't really know what this is yet or haven't gone through the resources, please go back to the YouTube channel and watch the videos and the educational lessons in order there. It all makes sense. We're going to touch on it right now. But we know that the solvable problem is what we call bridging the gap, right? You're bridging the gap. So in order to understand what the gap is, you have to understand where you currently are and where it is you want to be, what you truly want in life, right? Once you've defined those variables, you've then inadvertently defined the gap in between them, right? So once you've defined the variables, which is the first C, clarity, getting clarity around what the hell it is that you want in your life. This is going to be different for everybody. If your solvable equation is $10 million in 10 years, you don't have a solvable equation. You have arbitrary numbers that you've pulled from other people. And I've done it, so it's okay. All right, there's a very valuable video about the solvable problem in the Luna Den. We'll link that for people. But Callie and Courtney do a great job of giving some context to how to really define these variables and what it is you want in life. Okay, so you're defining the variables, you're defining the gap. Once you have a solvable problem, you have a core capital number that represents you getting everything that you want in your life. Once you have that number, your micro strategies become much easier to dictate and inform behavior on. So people come and ask me, like, I swear to God, it's every day. Whether it's people from real life or people from crypto or any of the social media platforms. Hey, do you think I should do this or this? Okay, it would be totally inappropriate for me to answer this question because I don't know what the variables are. They're different for everybody, right? I don't know what it is you want. I don't know in what time frame you're looking to get it. I don't know what your risk tolerance is. I don't know any of these things, right? So it doesn't make any sense for me to give any kind of advice. But once you understand what your solvable problem is, and you have a core capital number, the micro strategy and the macro belief are the two things that you want to align. Okay, you can't have micro strategies that are diametrically opposed to your macro belief. It does not make sense. You are working against yourself. So if your macro belief is in Bitcoin, okay, my macro belief used to be in Bitcoin, it's now in Guard. But if your macro belief is in Bitcoin, then your micro strategy could be, and this is not financial advice, it's just it's one alternative. There's a lot of loops that you can go through in strategies. Your micro strategy could be to take the yield that you're making. Okay, once you've I'll touch about it in a second. So it's to take the yield that you're making, use it as staking power to get, whatever 0.1 BNB a day, and you buy Bitcoin with that 0.3 BNB a day. Okay, so if Bitcoin is what you want more of, then that could be a micro strategy that helps you accumulate more of what your macro belief is. And the macro belief should be something that you believe will help close the gap for you. Okay, so think about it as a store of value or something that can close the gap for you and not widen it, right? US dollars is actually widening the gap because of inflation. We know how bad inflation is right now. Like true inflation numbers measured by the correct KPIs is anywhere from 15 to 25%. It's really bad. Okay, they're reporting it at 4 or 8. It's not true. Okay, it's much worse than that. So having something that closes the gap or keeps the gap the same. We don't want something that's widening the gap, right? So if your macro belief is Forge or if it's Guardian, right, then your micro strategies should be to accumulate more of what that is. So if your micro strategy is Forge, then it's likely a very good idea to do what is best for the project, which is providing liquidity, sitting in the auto compounder, building up your base case to where it needs to be to lock in getting what you want. Okay. So MicroStrategy could be to raid more Forge in the raids using your Knight. That does not put buys on the chart. So that does not move the project forward from a strategy standpoint. But if that's what you want to do, that's fine. If you have new BNB that you're onboarded, you can buy Forge with, then that's a great strategy. Okay, if you have a starting capital number and you throw that into the gold mine and you're compounding it, okay, you are earning more Forge and more BNB. It is taking that Knight and it is growing the LP tokens. And the LP tokens is the pair Forge and BNB. So you're earning more of both of those things. Okay, so you can break that. Let's say you needed to go and pay like an emergency. Let's say you got hurt in an accident and you had to pay a bunch of money for medical bills, right? You could break that LP. You could pull the BNB off, go and pay your medical bills, and you wouldn't have to sell your Forge. Did everybody understand the power of that? You don't have to sell the asset that's your macro belief if you're sitting in liquidity. If you're sitting in just tokens and something happens, you have no other choice. You can't sell Knight. You can't sell the BNB. You have to sell the asset. So it gives you more options. It mitigates risk. We're going to talk a lot about mitigating risk right now. Okay. So defining the variables, certainty is determining the most efficient path. So if you think that the gold mine is the most efficient path, and we do here, right? We do think that Forge has a ton of upside because it's very early. And if we follow, even a fraction of the same path as Guard, there is a ton of upside. Okay. So if you determine that Forge is your macro belief and that the gold mine is the vessel that is, or the tool that is going to help you accomplish your solvable problem. Okay, you're creating conviction, creating certainty in that path. Collapsing time, closing the gap. In a market where the asymmetry is so heavily to the upside, it is silly to go and chase more and to try to close the gap faster when the market will close the gap for you over time. Because we know that over the course of the years, Bitcoin has accumulated in value an average of 70% a year or more, right? So if we know that, it's the same thing with real estate, right? It's real estate keeps going up 15% every year. We're going to choose to believe the historical data until the pattern proves itself otherwise. So what happens is it becomes more important to mitigate risk and hedge the downside and let the market do the work for you versus going out and chasing moonshots and creating another job for yourself and trying to trade Forge or other assets. It's just not efficient. Okay. So this is what we were just talking about. Okay. So chasing upside in an asymmetrical market is the quickest way to blow yourself up. Okay. You think if I tried to trade this chart, Jesus Christ, it's at 842. Ridiculous. It's been trending organically all day too. And so is Wolfie's. They're both trending. Do you think if I tried to trade this chart, I would be in a better position? No. Okay, you think if I tried to trade shitcoins in a down market, I would be in a better position than if I just started a night farm and accumulated night and buying power and guard over time for free? No, probably not. You could get lucky, sure. I mean, like if you're a great trader, know your game, play your game. There's nothing wrong with that. But for most people, creating another job, suffering through the emotional swings of day trading crypto in an extremely volatile market is not ideally or not usually closing the gap for people, in my opinion. Okay, you don't have to share that opinion, but I've been there. I created another job for myself. You know, if you're telling yourself, I want to get into crypto so I have more time to spend with my family and with my kids and stuff, and then you're going in and staring at charts all day and trying to day trade stuff, you've just replaced a job with another job. It doesn't actually take you closer to what you want. So it's important to look in the mirror and understand what your tendencies are, and kind of try to prepare and curb your emotions. And being in, the base case or the gold mine is a fantastic way to do that. Okay, do you think that I could have held from inception? I bought Guardian at pre-sale, and this is November. It should be July, but do you think that I would have held through all of this without the conviction that this was the asset that was going to help me close the time, right? Or one of the assets. Now Forge is my secondary base case, right? And I only say that because I have a massive Guardian base case. Okay, do you think I would have been able to hold 1,000x? Guardian is up over 1,000x. Or do you think that through these emotional swings, all of this hype, like, oh my gosh, should I sell? Do you think that I would have been able to hold it all the way through without selling anything if I was sitting with just tokens? Probably not. So it is not appropriate to assume that you will have the conviction and the foresight to hold something through big swings like this without being paired and hedging the downside and just chilling, not worrying about it, because you know what to expect. You know you're on track. You know what variables to solve for, and you can take the data as it comes and understand: am I on track? Do I need to move some into something safer because I'm heavily in profit or over what I need on a monthly basis? So sorry, I just got a phone call. So it's much easier to sit there and just relax and understand I'm on track. I don't have to do anything. I don't have to click buttons. I don't have to make a bunch of moves. All I have to do is stop myself from blowing myself up, and I win. Okay? Like I said, if this Forge chart moved sideways for 6 months or a year, and we maintained anywhere around a 50 to 70% APY, everybody would be ecstatic from traditional standards. But because we're in crypto and people are like, but I could chase a moonshot and get 1,000% in 2 days. Cool. If that's what you want to do that. But that's not how Forge was created. It's not how it's intended to be used. So if that's you, you forfeit your privilege to come into the chat and demand that the team does things to benefit you when everybody else is acting in a different way and using the asset as it's intended to be used. Okay, so as time goes on and as things move a little slow, it'll be easy to determine who's doing what based off of their behavior. Okay. Let's go back to this. So this is kind of what we were just talking about, right? The erratic trader versus the confident investor. Creating conviction in a decision. Early adopters will always be the ones who make the most money. We'll talk about this chart in a little bit, but you can see smart money, self-phase. Okay. People who are the early adopters, they assume more risk, but they also have significantly more upside. Okay. And in a project that you know that the devs are not going to act maliciously, you already have a huge advantage over 90% of projects in DeFi. Okay, so that should ideally create some certainty within you, knowing that Michael and myself would never do anything to put you guys in a worse position. Everything that we do is trying to remove risk as much as we can while maintaining the upside that the market provides. Keeping ourselves in a position of strength, most amount of options, least amount of risk, least amount of effort, as Nick and Dan say. Okay, so the solvable problem, the 3 C's, all this stuff is the intellectual property of Nick and Dan. It was not stuff that I made up. Okay, we're going to be talking a lot more about it as I'm going through the CCA program starting in May. Okay, so if you have created conviction in Forge, then setting up a gold mine is likely the most effective strategy to move the project forward, to remove risk of emotional trades or anything like that, and just to collectively move the project forward by scaling liquidity along with our market cap, right? If you've created conviction, then resource allocation and recapturing and reallocating resources that are elsewhere that you don't have conviction in is likely a good idea. Okay, and this is not financial advice. You choose what makes sense for you. Just understand that amateur traders, they hold on to things because of loss aversion to loss, right? Because they're down, they're like, I can't sell this because I'm taking a loss and that will be the end of the world for me. It hurts. A loss hurts a lot more than an equal amount of gain would give you. Okay, this aversion to loss is a human inefficiency, right? So amateur traders, what mature traders do is they lock in their losses quicker. They say, I've lost this much money in this asset, but by not recapturing and reallocating this into something else that I know will predictably grow my money, the loss is actually significantly larger because of the opportunity cost that I could be having over here. Does that make sense to everybody? So, having like $500 in Shiba or Floki and being like, man, I really hope it goes up. I'm down like $100. I really don't want to sell at a loss. When if you had taken that $500 and put it into Guardian in the beginning of the year, you would be up 66x. If you put it into the Forge launch, you would be up 6x, right? So the opportunity cost of not recapturing and reallocating those funds into something that you have conviction in and certainty and belief is costing you a lot more money than what you think or what that perceived loss is in the asset that you're holding on to. Okay? So just understand that. Recapturing and reallocating is finding hidden pockets of income or money that you have laying around, whether it's in random assets or shitcoins or blue chip. Like when I consolidated everything into Wolf Den assets probably 4 or 5 months ago. And it was probably one of the best decisions that I made because I went to Nick's event. I created conviction in that he was a competent and overly competent, very smart guy and a great leader. And I was able to create the conviction to consolidate everything into those assets. And that turned out to be the best decision of my life. Okay. It's very likely, and we don't have a crystal ball, but it's very likely the same thing could happen in Forge. Right? I'm not saying it will, but it's if you have conviction and the people here are educated and we understand and we're all working together and we all operate under the same framework, it's very hard to lose because everybody's focusing on getting more buying pressure. Everybody in this space, in the DeFi space, it's all hype. It's all bullshit, right? How do we get more investors? How do we get more people? How do we make this more attractive? But as we talked about before, in a market that has a ridiculous asymmetry to the upside, the way you predictably win is by removing the downside, which is mitigating selling pressure, versus chasing upside. Because chasing upside and client acquisition and more people is not sustainable. Okay, you can't keep up over time trying to outweigh selling pressure with more buying pressure, especially in a space where people will have ADHD and they move on from project to project in 3 weeks or whatever. And those people are going to come in here and they're going to have no clue what this is, and they're going to radically trade their way right out of it. And that's totally fine. We're here for the people who understand. We're here for the people who are open to learning. But just understand the power of recapturing and reallocating resources. It doesn't have to be a lot of money, right? And you don't have to put this into Forge. That is not what I'm telling you to do. You should be figuring out what the vessel or the tool is that is going to help you solve your problem. Something that you have certainty in. If you don't have certainty in Forge, don't buy Forge. Simple. Okay, when people come in and they're like, why should I buy this asset? I don't know. You tell me. It's not our job to tell people what to do. It's our job to provide the framework, provide the perspective, and let people make decisions for themselves and how it applies to their life. Okay? Everybody else can watch on the sidelines. They'll figure it out. Okay. Next thing. Time and randomness, baby. This is something that Nick talks about a lot. This is something that I've operated under, and I didn't really realize until it was titled and I, was exposed to this through Nick's teachings that I operate under this because I don't plan stuff. I'm not a big planner. I just do stuff, right? And I leave space. When I went and traveled the world for 8 months, I planned where my next place was that I was going, not the hostel I was staying at, not what I was going to do, not any of that stuff. And a lot of the greatest experiences came from me meeting somebody in a hostel and then being like, yo, we're going to this city, or we're going to go do this, or we're going to go on this adventure. And if I had made a plan and been confined to that plan, I would not have had the opportunity to meet a bunch of amazing people, have a bunch of amazing experiences, because I was not allowing for randomness. Right? So Nick says time and randomness are undefeated. Okay, so if you are trying to beat time, you will lose. If you are trying to beat randomness by making a detailed, exact plan where everything has to go right, you will lose more often than not. Okay, and that's I know that's kind of contrary to popular belief, but planning things to the T is a surefire way to not be prepared for when something goes wrong. Right? So like in the fitness space, if you have an exact diet that you have to follow, and it's chicken, rice, and broccoli for 3 meals a day, and you go out for happy hour and you have tacos and a margarita, if your plan was to be perfect, you have now a perceived failure, right? And the wheels come off and everything falls apart. Okay, self-sabotage. If you have time, if you allow for time and randomness, you're like, okay, well, my calorie deficit only really needs to be over the course of a week, which means that one meal or one day is not going to negatively impact the outcome over a longer time preference. And I can have some of these calories if I budget for it through the beginning of the day, right? You allow for randomness. Now there's not a perceived failure. Okay, it's if anything, it's treating yourself. You treat it as a refeed day or any of these technical terms, but you don't fall off the wagon. It becomes a much more sustainable option, and that's the same principles apply in investing. Okay, if you have an exact time frame where everything has to go right, you crunch the numbers, you do the math. I'm sure you're doing the math right, but are you doing the right math? Probably not. Most people aren't. I wasn't in the beginning. So that's something that we'll talk about, and we did talk about in one of the videos, but we'll talk about a little bit more. Okay, so just understand that broadening your time frames and keeping time on your side, your expected time frames. 10 years is likely going to pass for all of us, regardless of what happens. Right? Unless you die. God forbid, I hope everyone here lives 10 years. But it's very likely that you survive 10 years. Right? So why not keep time on your side instead of trying to push as hard as you can, as fast as you can, and ending up burning out or blowing yourself up. Okay, a lot of people, when I first started in the DeFi space, I was trading shitcoins and I lost almost all of my money very quickly by holding on to things, by not cutting losses too quickly, by doing all of the stuff that I'm telling you above not to do. Okay. I speak from painful experience. I know. Okay. The shortcut is equal to the long way. And this is something that I tell people all the time in fitness, right? With complex systems. If you try to take the shortcut, and these are the yo-yo dieters in the fitness realm, right? Lose 20 pounds really fast for an event, gain it back, maybe another 10. You do that, 2 or 3 times throughout every year. So you keep gaining and losing the same 10 or 15 pounds, but each time you're losing a little bit of muscle mass along the way. And that's bringing your metabolism down with it. Okay, your basal metabolic rate down with it. When you actually want to do things the right way, eventually, you are going to have a much more difficult time because you've essentially, and this is, I hate saying it this way, but you've essentially ruined your metabolism by teaching it to put up the defense systems by trying to go too quickly, too fast. What do we know about system reliability in complex systems? The faster you try to scale a complex system, the lower the system reliability comes. The more complexity, the more pieces, the lower the system reliability, right? Which is why we're not trying to do all kinds of fancy shit in Forge. It's very simple. There's a clear path, and we're not trying to throw shiny shit at you guys to be like, look at this, look at all this cool stuff we're doing, look at this hype. That doesn't make our system more efficient. Turning on the hose of client acquisition harder into a leaky bucket doesn't solve the problem, right? We need to build a strong foundation and position ourselves and market ourselves to the right kind of people, and everything else will take care of itself. We are literally engineered to raise the floor. All we have to do is not die. The statistics of projects that die within a year in DeFi is staggering. So all we need to do is survive. And if that's the way everybody operates, and we do things in a sustainable manner, people are using the asset as intended to be used, it's pretty easy for a project like this to survive versus something built off of hype, right? So the other thing about time is being in a position of strength, okay? And we'll talk about the market cycles and what all this means in a second. But putting yourself in a position where you can accumulate assets daily in a down and sideways market. Okay, where's my trading view? Oh. Bitcoin. Okay, so this is Bitcoin over the last November. Okay, this is since the guard chart started. This is Bitcoin's trajectory. Okay. Here's Guardian's trajectory. And if it's been yielding you some assets for free along the way too, Guardian has outperformed every other asset in any market across the board this year. Anything that you can imagine, it is outperformed against the macro market looking like this. Okay. We are not paired with a stable coin, so we don't have that same kind of decoupling and that's something that we can change in the future. It's just not something that we're currently subjected to, right? But being in a position of strength, being able to accumulate a ton of night and a ton of these other assets, if we know, we're going to skip down here for a second, understanding the cycles and phases, okay? So Bitcoin operates on a 210,000 block cycle, which is generally about 4 years, okay? But it's actually a 210,000 block cycle. At that point, there is a halving event, okay? The site's pretty cool, bitbo.io. So you can see the future Bitcoin halvings. The next halving event is happening May 4th, 2024. Okay, and what it does is it's reducing the quantity of Bitcoin that's able to be mined over time. So eventually there will be no new Bitcoin that will ever be able to be mined. Everything will be in existence, and there will be a massive supply shock because there's a limited supply, right? So by supply and demand, there'll be a massive supply shock. Now, every 4 years, there's always a drawback after these halving events, right? So if we know the next halving event is in 2024, and and everything can change, right? This is all just what we know from historical data, and we know that Bitcoin, on average, moves about 70% a year, right? If we can spend this entire time, okay, for example, if you spent this entire period, July 2019 to even July 2020, 1 year. If you spent 1 year accumulating assets, like let's say Bitcoin was your macro belief, and you bought $50 or $100 of Bitcoin every day for 1 year, what happens when the market cycle comes? All of that $50 or $100 of Bitcoin that you made a day now becomes 200 or 2,000 or 4,000 or whatever, right? You make an exponential amount of money by putting yourself in a position of strength, which means you can accumulate in a down or sideways market, and you keep time and randomness on your side because we don't know when the next market cycle is going to happen. But we know that if Bitcoin appreciates on average 70% a year, and it kind of follows this trajectory, okay, it kind of follows this trajectory, then we know that we're going to make a lot of money when it comes, and we don't care when it comes because we're not stressed out, and we're not just holding an asset that's depreciating in value throughout this whole period. Okay, so not only are we not subjected to all the emotional swings of a down market or a bearish market, but we're also in a position of strength and accumulation during that period, and keeping time on our side when that cycle does come. Then we can sell things, we can do different things to get us closer to our solvable problem or our macro belief or whatever. Does that make sense to everybody? So engineering wins means putting yourself in a position of strength during specific times of the market and knowing the market cycles and how things happen. Obviously, we don't have a crystal ball. We don't know exactly what's going to happen, but Bitcoin has never strayed from its historical pattern. And so until it invalidates that, it's likely a decent decision to assume that is going to continue. Right? So just to touch on randomness a little bit, because we touched about time, there is multiple paths to get to the same destination. If you put in your GPS, I want to go here. There's 2 freeways. They both get you there, right? If you choose the one that's the fastest route, that's fine. I mean, you're likely assuming more risk, depending, I mean, with GPS and car and stuff, it's not the best analogy, but just understand that if you have preset, I want to take the 101 to go to San Francisco, right? And the GPS is telling you, well, you can take this route and get there in a similar time. But you're like, you know what? No, I really want to take the 101. And there's some kind of construction or an accident or something like that. Because you were so dead set and had a detailed plan of how things were going to go and you didn't allow for randomness, you end up not getting to your destination on time. Right? So both of them get you to where you want. Don't define the path. Don't spend all this time defining the path. This is where a lot of entrepreneurs and people kind of go wrong, is they try to wait until the perfect conditions. They try to plan everything out. Everything has to be perfect. I'm guilty of that. But as Nick and Dr. Jeff and other people say, action organizes. Take imperfect action. Don't define the path. The path will reveal itself. The path will change. The most efficient path forward will change over time, and it'll change based off of things that we cannot conceive of today. So it doesn't make sense to focus on one thing, right? Who knows? Maybe not. Like for example, when Guardian launched, Night Swap was never the plan. Nick did not want to launch a DEX, right? But because Ape Swap and Baby Swap couldn't keep their word on keeping the emissions rates where they wanted them to be, the most efficient path forward became, let's just create our own DEX, right? So allowing for time and randomness, if they had a roadmap and they had all these different things on it and everything had to go according to that, otherwise all the investors would FUD and do all this stuff, then they would be confined to a path that is not the most efficient path forward. Okay, so just remember, you don't need to define the path. As things reveal themselves, we will change the strategies if need be to remain the most efficient path forward. Okay? So it's also a great way to manage your emotions, right? If things don't go according to plan, if your plan is loose and allows for time and randomness, you're not subjected to these crazy erratic emotions with anxiety and all kinds of stuff, right? Like, well, oh well. Turn a negative into a positive, move forward, right? So, just go over this graph really quick. This is kind of like a general is very general trajectory of quality investment or whatever it is. Okay, a token, whatever. Okay, in the beginning, it's kind of the stealth phase. Not a lot of people know about it. Why they call it smart money is because people who get in early and get in cheap on things that are innovative and are scrutinized, but they have conviction. They've built a belief and conviction in. Those people are very smart because they make the most money, assuming that they hold, right? They could be this first sell-off. They could take their 2 or 3x. Just now, there was a girl who posted a TikTok video who said, I sold a token for 3x that went 1,000x. Worst decision of my life. Guess which one she was talking about? Guard, right? So if you don't have conviction, you don't have belief, you don't have an understanding or have chosen, that asset to be the most efficient path to get what you want, then it becomes very easy to just hold the tokens and sell them off when you're at a slight profit. There's nothing wrong with that. Like if you want to trade it and that's your game and you have a different plan, cool, go do your thing. I'm not going to pathologize you for selling or choosing a different asset or anything like that. We're just providing information and perspective. You make the choice for yourself. Okay. Next kind of comes the institutional investors. This is where some of the bigger money comes in where they're like, oh, there's a lot of upside here. Like, there's good liquidity or whatever. Like, let's get in on this. They call this kind of the bear trap, right? The first sell off where people are like, oh, I sold the top. I'm a genius. Okay. People have been doing that on Guard for fucking 9 months. I've been buying the top intentionally on Guard for 9 months because of how much conviction I have in it, right? Same thing with Forge. But I'm waiting for you guys to get positioned before I come in. So you're welcome. And then this is where you don't want to be in the investment curve. When the public starts figuring it out, there's a bunch of media attention, there's narratives, there's enthusiasm, greed, hype, all this stuff. When you see that, it is likely a good decision to act directly opposite of what you feel like you should or what you're feeling. Okay, the euphoria, the hype, you're like, oh my God, this is where the greed kicks in when you're like, I'm up 10x, but I could make, I could make it like 20x. And I'm talking more about shitcoins than I am about Forge, but this is where a lot of people chase green candles and they FOMO in, and these are the people that end up getting wrecked time and time and time again. Okay. So despair. Okay. People are like, oh my God, like, And it's funny because this is the average trajectory, right? But because you had this huge peak and this huge valley, people who were at the same mean price are now at a huge emotional deficit and in despair and upset because they saw their money increase so much and come down so much. Whereas if it just stayed on this trajectory line, everybody probably would have been happy. They're like, oh, I'm in profit, right? And you likely wouldn't have had people who were buying the top because it was a slow, consistent, steady climb up, which is what we're looking at engineering and Forge, right? We're not looking for this, even though this is what the beginning of our chart looked like. We did not have any control over this. We did not expect there to be a 10x pump off of launch. But we said, you know what? This benefits us with the volume. We're not going to curb it. We'll let people trade this thing and do whatever they want, and we'll see where it stabilizes, and we'll try to make it sustainable and hold the line there. Okay, and being up 6, 7x, like up to all the way to a 10x and stabilizing around here is incredible. That shows incredible strength in the community. We have some very smart and understanding holders. We have a very good holder base so far. We got 480 holders. We got just under 1,000 people in the Telegram, and we're doing great. Okay, there's some selling pressure from people. I mean, the majority of people who have been selling Forge and buying Guard with it. So there's not as much upside in Guard, but it's more secure, right? And the lending network's coming. There's all kinds of stuff. And maybe that's helping them get closer to their solvable equation. So by all means, let them go do their thing. Just a cheaper price for all of us who have conviction in Forge and are waiting for the dips, right? So if you're an investor, if you're calling this is an important distinction. If you're calling yourself an investor and you're looking at short-term price action, daily price action, and you're feeling any sort of emotional reactions, you are not an investor. You are a trader. That is framework that traders operate under. Okay? I never look at anything underneath a 4-hour time frame unless I'm looking for a very specific entry point or to make some kind of move. Okay? Like, if anything, you should be looking at the long-term trends here, right? The daily chart, the 12-hour, the 4-hour. And if you're in the gold mine, you don't even have to look at any of this shit because it doesn't even really matter. It could go down 20%. It could go up 20%. You still win. You win financially and you win emotionally. So the point I'm trying to make is if you're in Forge and you're not using the asset as intended, you're missing the whole point, and this might not be the place for you. Or you might not have set up your solvable equation. You might not have a true solvable equation. You might not have a true macro belief. You might not have done the work yet, which is fine. We're here to help you if that's what you're looking for. We're happy to point you in the right direction, but we're not going to do the work for you, and we're not going to conform to what you want us to do when everybody else is using the asset as intended to be. Does that make sense to everybody? Cool. The rewards wallet just crossed $200,000. We've hit our cap. We said 30 days. It took 3. So, yeah, we're really excited about that. Excited about Guard, excited about the ecosystem. I mean, Wolfies and Guardian are both trending. They've been trending all day. Spartans is doing some cool things over there. Wizards got their game out. We've got our utility launching multi-chain marketplace in the next 1 to 2 weeks, likely on Monday, but I'm not going to give any set timelines. We've got some utility NFTs coming out that we've already kind of done the artwork for and done the legwork for. We got a big AMA this weekend in Crypto Legends. It's a 24-hour AMA. I'm going to post all the details about the time and the place. It'll be on Twitter Spaces. Excuse me. It'll be on Twitter Spaces. And we'll be going. The Night Swap will be going right after us, and the Spartan's token will be going right after them. So there'll be 3 hours of ecosystem stuff. If you're around and you have time, highly recommend you attend and show some support. We are going to be giving away $2,000 worth of Forge. Okay? That we will buy. We will buy that Forge so that even if people do dump it, there is an equal buy to match the sell. Okay, so that's a couple of things we have coming up. The auto compounder is likely going to be done in 1 to 2 weeks. Wizard's a real busy guy right now, but that's coming soon, and that's the next big lever for us. Just understand, we're not going to be pumping stuff out for no reason. Okay, this is something that people are going to have to understand. It's going to get boring, especially when the auto compounder comes, and you don't have to click any buttons. You're going to feel the urge to do something, and that's what you need to fight or understand, become conscious and aware of. Okay, don't fill the void just because you feel like you have to. The people that sat in base case from the beginning, put it in the auto compounder and forgot about it, are winning very, very big right now. And they've had the time and space to focus on the things that really fucking matter to them in their life, and not stare at these charts and stress through all of this kind of. I mean, there hasn't been a lot of stress on guard, but you know, it's a big lever for us. We're excited for it. So that's pretty much all I really have for today. Does anybody have any questions or comments or concerns or anything about the things that we talked about?
Well done, Daniel. Thank you, bro. Appreciate you. Very well done.
You're welcome. Wow, this light is so bright. All right, I'm gonna stop the recording real quick. Just give me a sec. Oh, just